Welcome back, everyone. Today on the Joseph Carlson Show. This is an impromptu episode. I don't have any type of monologue prepared or anything like that, but this is a breaking news response to the breaking news that Google stock is currently down 5.5%. It was almost down 6%, while the rest of the market is going up. So why are other companies in my portfolio doing so well, and Google's going down quite far? The stock isn't at a high valuation, but there's other news causing this drop. Google shares are trading lower after the Department of Justice is demanding that Google divest its Chrome browser. So the rumors are true. They finally thought of their remedy, and they've officially sued Google, demanding that Google sell off Chrome browser. Now, Chrome browser is the most loved, used browser on the internet. It has billions of users. It's a valuable asset to Google, even though it doesn't generate any income. And this is exactly what the Department of Justice is now saying, that Google has to divest. They have to sell off. They can no longer own it. Now, I want to break this up into two parts. First of all, what exactly is Google Chrome? How does it fit into the Google ecosystem? It doesn't really generate revenue, but how does it indirectly help Google? And then the second part of this video, I want to go over my shares of Google, what I think of the situation, and how I'm going to determine whether or not I buy more or sell Google stock, and the conditions of which I'll make those decisions. So let's first of all jump into the first part of the video. What is the Justice Department exactly doing, and what is Google Chrome browser? The reason this is important for Google is because Chrome is the most ubiquitous, most well-loved, well-used browser on the internet. Like I've mentioned before, the number one search on Bing when people go to Microsoft Edge after it's downloaded by default onto a Windows device is to search Google Chrome. People swap off of it onto Google Chrome because they like the experience better. And although some browsers are upping their game and they're getting better over time, Chrome still has the demanding lead. They have billions of monthly active users on it. Now, it's true that Google does not monetize this directly. So you don't have to use any type of payment mechanism directly on Google Chrome to enjoy the benefits. But Google makes a lot of indirect money and revenue from the Chrome browser. Consider this for a minute. Every major tech company is trying to create an ecosystem. Apple has the strongest ecosystem, the most integrated, vertically integrated products, from the App Store to the OS to the hardware to even the custom chips they make. All the apps have to follow with their rules so that they all look the same, they all act the same, they have the same social guidelines. Everything is so perfect. It's so smooth with Apple. The ecosystem's so vertically integrated, and that's part of Apple's success, is controlling the boundaries of that ecosystem and building out that vertical integration. Well, Google's trying to do the same thing. You have many different products that Google owns, all these separate services, and Google's trying to wrap them into a centralized ecosystem around the internet. And the key of that ecosystem, the key part of this whole ecosystem is Google Chrome. Consider this for a minute. It's the way that you access the internet. And every single product Google has is on the internet. Whether it's YouTube or Google Cloud, whether it's all their documents and Drive products, whether it's Gmail, everything is around the internet. That's a huge part of their company. And owning Google Chrome allows them to create this ecosystem experience. You have your integrated bookmarks that sync from browser to browser that are attached to your Google profile. You have your login from Google on the browser so that when you visit a new Google property, so like if you visit YouTube, the browser already has your login information. It already knows you're logged in. Or if you visit YouTube TV, tv.youtube.com, again, it already knows you're logged in. So it just keeps you logged in across their various products. So by taking away that central key, taking away the browser, you would have all these separate properties that you'd have to log in separately on each one of them. It's also something that they can use to gauge internet consumers' behavior. They can gather analytics. They can use it to advantage their advertising business. And of course, the big one here that the Department of Justice doesn't like is that Google Chrome comes defaulted with Google Search, not with Perplexity, not with Search GPT or any other search engine. So this isn't just some non-revenue product that doesn't make any money, that's not really worth anything. This is a massive part of Google's business. It ties together everything. And there's a lot of potential issues with breaking it up, both for customers and for Google. The first one's for Google is when you break this up and you sell off Google Chrome, it's kind of the worst of both worlds for Google because it doesn't generate any direct revenue, so you're not going to get a high multiple on selling it. Google investors are not going to make a lot of money selling this. It's a singular product in and of itself without the rest of the ecosystem. It's just not worth that much. You could sell it for $10 to $20 billion, which of course is a lot of money, but not for Google. That's not a lot of money. They have like $80 billion on their balance sheet. They make $70+ billion a year in free cash flow. Selling off a critical property and getting 10 to 20 billion is nothing. It's like a little bump in the road. Cool, we got some extra cash, but we lost this critical infrastructure of our company to grow in the future. So the trade-off in terms of what they're losing and what they could generate in potential sale is not good. So the Department of Justice is wanting to demand Google to sell something that's worth way more under Google's ownership than it is under anyone else's ownership. Google can extract way more value out of Chrome than any other company. That is the bad part for Google investors. Now, the bad part for customers and other people is that Google is a well-liked company on the internet. People don't just use Google Chrome because they hate it and it's a bad experience. People don't just use YouTube because they hate it and they don't like YouTube. People don't always choose Gmail because they hate the product or Google Drive because they hate the product. As much as we like to hate on big companies, Google creates products that people love. So it's hard to imagine that selling it off to some different company that hasn't been perfecting it for the past 10 years is going to do a better job at making it so that it's something people love than Google. More than likely, they'll try to extract immense value out of the product because they paid $20 billion for it. They need to get a direct return on that. So whoever buys it is likely to promote a different search engine. They're likely to try to monetize through a ton of different direct ways of monetization and other ways to get a direct ROI. So it's bad for Google because they lose dominance in their search. They don't have the search defaulted on it. It's bad for Google because they can't create an ecosystem that they can get the analytics and the whole view of the internet and what's going on. It's bad for Google because they can't do things down the road, like potentially wrapping in an artificial intelligence system within Google browser or within Chrome browser that helps out, managing everything, kind of like Apple's doing with their Apple AI. It's bad for Google for a lot of reasons. And the upside is very minimal in my view, $10 to $20 billion in cash flow, very minimal upside. So from the Google perspective, don't like this deal, don't like it at all. And Google doesn't either. They posted on X just today that the DOJ had a chance to propose remedies related to the issues in this case, search distribution agreements. Instead, the Department of Justice chose to push a radical interventionist agenda that would harm Americans and America's global technology leadership. Google directly called the DOJ a radical interventionist agenda. And based on what they're doing here, I agree with them. When we look further into their post here, they have a simple blog post that outlines the dangers of what they're trying to do here. They first of all they openly acknowledge that there's other remedies to this problem. So Google's not saying, hey, we'll do nothing to work with the DOJ. We're just going to be stubborn and not make any changes. No, they're saying there's lots of changes we could make that aren't as destructive and potentially risky to the customer. The DOJ had a chance to propose remedies related to the issue in this case. Search distribution agreements with Apple, Mozilla, smartphone OEMs, and wireless carriers. Basically, Google's saying, we'll do this. We'll make it so that we aren't paying all these parties to default our search engine. That's the problem here. That's what they outlined in their case. Google's paying all these parties, and the Department of Justice said you can't do that anymore. But now the Department of Justice is saying not only can you not pay all these properties, but we want to slice and dice your company up and products that you've been working on for the past decade. That's entirely different than that remedy addresses a different symptom. It addresses a different problem. Instead, the DOJ chose to push a radical interventionist agenda that would harm Americans and America's global technology leadership. The Department of Justice's wildly overbroad proposals goes miles beyond the court's decision. It would break a range of Google's products, even beyond search, that people love and find helpful in their everyday lives. This extreme proposal would endanger the security and privacy of millions of Americans and undermine the quality of products people love by forcing the sale of Chrome and potentially Android. It would require disclosure to unknown foreign and domestic companies of not just Google's innovations and results, but even more troubling, America's personal search queries. So along with selling this off, they have to sell off basically all the information they have about you. Google has a ton of information, but in every single terms of service agreement, Google says, we're never going to sell this information. We're never going to sell you out and sell it to a different company or a different entity. We only use your information to make our products work together better. But now they're being forced to sell you out. The Department of Justice is saying, take all that information that you gathered about these users and give it to all these various competitors that are the highest bidders. So Google's outlining that, you might have to be forced to sell all of this information to companies that haven't been as good of stewards over your information. They say they have to chill our investment in artificial intelligence, perhaps the most important innovation of our time, where Google plays a leading role. Hurt innovative services like Mozilla's Firefox, whose business depends on charging Google for search placement. Like I outlined, Mozilla Firefox exists today because of that default search. They don't make money doing anything else. What other products do they really have that generate a lot of revenue to continue development on Mozilla Firefox? So the Department of Justice is basically killing off Mozilla Firefox in the process of this attempt to break up Google. Deliberately hobble people's ability to access Google search. That's another thing is, you can go deeper into this, but the Department of Justice wants to make it so you have to go through like 7 different screens to finally be able to default Google search. So even when that's what people want and what they enjoy, they want to make it so that all these other search engines are like spammed in front of you before you finally get to Google search. They want to mandate government micromanagement of Google search and other technologies by appointing a technical committee with enormous power over your online experience. Google outlined on Twitter that this technical committee is like this government bureaucracy sitting between Google and the customer that has to give the okay on different user interface screens. They will have to, Google will have to develop something, submit it to this technical committee, and then the technical committee goes, yep, that looks good by us, or you have to change that around. And they get the ultimate say on the design of different pages before it goes out to the public. This is stuff that I typically read about in China. The Chinese government and how they have committees on different companies where these bureaucracies sit between these companies and the customer. This isn't simple regulation. It's not saying here's some guidelines and if you don't follow them, you're going to be in trouble or fined. This is like the government completely sitting in a building with these companies and working directly with them like they're UI experts. So the micromanagement is also, the potential of that is immense. Now, of course, there's a lot of people that are going to say that this is from Google's perspective, and it certainly is, but I think the arguments stand on their own feet. This is a really dramatic move from the Department of Justice. I think as people get more educated on what this actually entails and how it could change the customer experience, I think there's a chance that it's not going to go through. And based on what I see right now, Google is signaling, we are going to fight this to the death. So if this goes through, we're going to throw everything we have at it. Google's going to give it everything they have to stop this from going through, because I think they're really concerned about it. I think if they weren't concerned, they wouldn't be coming out this heavy-handed right to begin with. If it was just remedies to not default on other search engines, that's one thing, but selling off Chrome is a very big step, and having this committee at Google is another very big step. Now, there's people that are suggesting also that this isn't going to happen because Trump will get into office and he'll change around the Department of Justice. I think there's a chance of that. I'm not ruling it out. We'll have to see, but it's not something that I'm 100% convinced of. Now, again, all of this is kind of the first part of things, which is, what is Google Chrome? How will this impact the company if they are forced to divest? The other part of this I want to address is how I view this as an investor and my thoughts on whether to buy more or to sell or what to do with Google right now. Let's go ahead and take a look at my portfolio. We have it right here. This is the passive income portfolio. And despite Google going down and not performing well, this portfolio it's been doing really well. We're up again, $312,000. So, I'm highlighting the one company that's not doing great right now. In the tech category, we have every other company rocketing up, right? So there's something wrong with Google. Right now, I have a $34,000 position in the passive income portfolio, $600 in the red now. But I'll also mention that this isn't the only place I own Google stock. I actually have this company across both portfolios. Under a longer timeline, I've been bullish on Google for a while, And I also own $42,000 of it, so a bigger position in the story fund that's currently in the green by $13,600. So this is one that overall right now, I'm heavily in the green on. I don't feel trapped in this company. I could sell Google today, take my gains, and move on to a different company. So I'm not coming at this from a perspective of needing to be an apologist for Google or feeling like I need to hold this position. That's not why I hold the company. I'm not trapped in. I'm in the green. Things are good. I'm barely down anything in the passive income portfolio, and I'm doing well in this one. So I don't feel trapped in here, but I do feel like Google is becoming less predictable. That's the theme that I'm getting over the past week, especially with this news. There are so many lawsuits that are targeting Google. When I look at my investment philosophy that I outlined, this PDF is free, I go over all this stuff like intrinsic value, determining which stocks to buy. And I also have portfolio management. In order to beat the benchmark, in order to outperform the S&P 500, you have to have good portfolio management. You have to know when to buy and when to sell, when to hold. One of the rules that I outlined is that generally speaking, it is not good to add to companies that are becoming less predictable. Now, many times it's tempting because the stock price goes down when they're becoming less predictable. So if the stock price is coming down and most people think it's becoming less predictable, but it's really still predictable, that's a good time to add. But it's not good to add to companies that are genuinely, with their fundamentals, becoming less predictable. So right now, seeing as I own already around $70,000 of Google, it's been a position I've held for a while. With this news, I'm not adding just yet. I think the stock overall is becoming a little bit less predictable with this type of regulatory scrutiny. There's just so much intensity on it. So I don't want to add right here. I could see if you're just building a position brand new and you don't have any exposure, you might want to add here, and I wouldn't be against that. But for me right now, owning $70,000 of it, I don't feel good just doubling down on this company because frankly, I have other great companies in my portfolio that aren't becoming less predictable. I look at companies across my portfolio and many of them are just business as usual. They're killing it. When you get into these type of headlines, our brain just focuses on the threat. We focus on this one threat and it starts to erase everything else. So I want to just back up for a minute, just zoom out for a minute and look at what Google is. This is a company that is globally dominant. They have a very broad reach internationally. It's a company that trades at an optically cheap valuation of a 18.5 forward price to earnings ratio in a market where the NASDAQ is at a 31 forward PE ratio. Google is an AI tech company, one of the leading ones in the world that's trading much cheaper, around 40%, 30% cheaper than the QQQ's average weighted PE ratio. When we look at the different businesses of Google, it's true that advertising is still their biggest business by far, but you have YouTube ads, and this doesn't include YouTube subscriptions. So many people are switching to YouTube Premium and subscribing to it. You have the Google network, which is still going to be fully intact. You have the subscription portion of this, which is growing quite fast, almost 30% year over year. Then you have the massive business Google Cloud growing 35% per year while the margins of it are marching upwards. This is a fantastic property that Google owns that over time is making up a bigger and bigger percentage of Google, going from around 7% of the overall revenue to now 11% of the overall revenue. It's a massive business. So overall, when I look at Google and the qualities of the company and the fact that it's still trading at a below 24 PE ratio, I have to believe that the risk and reward is still positive. I think the company is still a good bet right now. It's a great company overall. It has serious headline risk and it has a lot of negative press right now that is affecting the stock price. Investors are pricing that in actively. But again, I look at it and it's at a 19.4 PE ratio. Is it going to go down to a 17, a 15, a 13, a commodity multiple? Like it's trading like it's like Ford or GM. Google's growing earnings quickly. Cloud's growing quickly. YouTube is a world-class asset. So I can't see it going to the point where it's being priced like it's some highly volatile oil company or something. I just have to believe that right now the risk and reward is still positive overall. But the predictability is in question a little bit more today. So I'm holding my shares, but you can do what you want with yours. That's all for now. See you in the next one.